This video will demonstrate the allowance for doubtful accounts. Just to start off with, let's complete a sale on account, pay later, to Jeans Boutique Inc. We're going to be selling them $100,000 worth of jeans, just like our problem. And here I have $100,000. What is the entry? The journal entry will be debit accounts receivable $100,000 and credit sales of jeans for $100. Our cost of sales is $40,000 and our inventory on these blue jeans is will reduce by $40,000. Now process the entry. 100,000 sales, 40,000 the cost of sales, and I have a net income of $60,000. If I want to record a payment of rent, I can do that. Very easy. I go to purchases. I'm going to be paying later for my rent. I can do that. Alexis Neon. I will write here rent. How much? Invoice number. I guess I got an invoice number. Pay $5,000 for. Here we go. Is the amount $5,000. What is the entry when I post this? Let's look at it again. It's debit rent expense and credit accounts payable. Process the transaction. What is the effect on the income statement? Based on the accrual method of accounting, even though we haven't paid now, went from $60,000 to $55,000 because $5,000 is an expense. 3 months later, this particular company has not paid its accounts receivables. We look at our income statement, assuming this is the only transaction from the 1st of January to the 31st of March. The same thing. We have a profit of $55,000 and I have a sale of $100,000. When I look at my aging schedule, you notice my total accounts receivable is $100,000 and it is over 90 days, from 61 to 90, over 90. We have a risk. According to our e-text, we calculate a risk of 10%. If we calculate a risk of 10%, we need to process the following journal entry. The following journal entry that we need to process, and the comment would be to record bad debt expense, would be debit bad debt expense, $10,000, and credit allowance for doubtful accounts. The moment we post this entry, look at the effect. If we go to our income statement, at the end of the month, you will note that we have a bad debt expense of $10,000. The bad debt expense has the effect of matching our revenues with our expenses. I didn't say this properly. The $10,000 reflects the potential risk of not collecting our $100,000 from Jeans Company. Therefore, by using the allowance for doubtful accounts provision, we are matching our revenues with our expenses. And if you notice, our income decreased from $55,000 to $45,000. Now, what will we show on our income statement? Go back to financials. At the end of March 31st, our income, what will show on our balance sheet? Our balance sheet will show the $100,000, which is the amount that we expect to receive, but because the particular customer has not paid within its time period and there's a risk, we have an allowance for doubtful accounts of $10,000. Our net realizable value is $90,000. This is the amount that we would show in our financials. Let us resume. We're going to continue with the same example, where at the end of the year, if I go back to my income statement, at the end of the year, the temporary accounts, all of my revenues temporary accounts will be closed to retained earnings. The $45,000, if you wish to see where it is at this instant, we'll simply go to our balance sheet, and right now you'll notice that we had retained earnings opening of the previous year of 29 and our current earnings of 45,000. When we close retained earnings, when we close our income statement, net income, the 45,000 will go into retained earnings and show, instead of 29, it will show 74,000. So let us do a closing. So we're going to say maintenance, start new year. I don't want to back up. Okay? If we begin a new year, and I go to my financial statements, I go to my income statement, you will see on the 1st of January, this is the beginning of the new year, you'll see 0. What will we see on the balance sheet? Let's do that instantaneously. The 1st of January of 2015, the new year. If we scroll down, you'll note that all balance sheet accounts are permanent accounts and they are never closed. So my net realizable value is $90,000. Let us continue in the 1st of January 2015 with a new sale to a new customer. Continuing with the same example, we're going to make an additional sale to another customer called Costco Inc. And we're going to sell 500 pairs of jeans for $50,000. Going to process the transaction. And I guess this company here, company DEF, is not having a good time. And we're going to just change the session date. We're going to advance it till the end of March 31st again. And say OK. So let's look at our aging schedule. If we go to my customer aging schedule, let's select them all at the end of March. We notice that we have $150,000 to receive, and one customer, the same one, is really in trouble. It's over 91 days, and Costco is 61 to 90 days. It's just to demonstrate the allowance for doubtful accounts. In this particular case, we need to calculate the new provision. And over 91 days, let's keep it at 10%. And from 61 to 90 days, let's say it is 5%. So 10,000 and 10% times 100,000 is $10,000. And 5%, that's our risk of 50,000, is 2,500. Our new allowance for doubtful accounts is 12,500. I will provide you with an Excel spreadsheet to demonstrate this, and I'm going to do that right now. Here I'm demonstrating the calculation of our new provision. This particular company just made a sale to Costco, but it hasn't gotten paid or hasn't received payment. Because it's from 61 to 90 days, I need to provide you with the risk. The risk here is 5%. 5% of $50,000 is $2,500. The other company, Jean Boutique, is over 91 days, and we're still assuming a 10% risk. 10% of 100,000 is $10,000. When I add both of these risks together, I get 12,500. We need to look at the balance sheet because 12,500 needs to be the amount that will appear as the allowance for doubtful account and always as a credit balance on the balance sheet. So let us look at the balance sheet right now. The balance sheet at this moment shows a credit balance of 10,000, but it needs to show 12,500 as our final. If we were to post or prepare a working schedule, the working schedule would be, or the worksheet, it would be as follows. Because we calculated the new allowance for doubtful accounts as 12,000, plug in the 12,500 in our final column. Then you need to make this into a true equation. If my opening allowance for doubtful accounts is $10,000, do I need to debit or credit account to increase it to 12,500 credit balance? This is a credit balance. Your allowance for doubtful accounts will always be a credit balance. So if I have a $10,000 credit, what do I need? I would need a $2,500 credit amount. And when we post this journal entry which says debit bad debt expense of $2,500 and credit the allowance for doubtful account of $2,500, it becomes a true equation. And based on the circumstances, we need to increase our provision from $10,000 to $12,500. This journal entry, I will post it in Sage Accounting, and you will see the effect on the income statement. We will post this transaction, and as you see, the system will debit bad debt expense of $2,005 and credit the allowance for doubtful accounts. This will have the effect of reducing our income statement. And here we go. We're going to post it. let's look at the income statement. What is the effect? From the first to the end of the month, or the end of the quarter, we made $50,000 sales. The inventory cost us $20, and the bad debt is $2,500. The bad debt expense has the effect of reducing our net income by $2,500. In other words, our profit should have been $30, but because we have a bad debt provision of $2,500, it reduces our profit. Let us look at our balance sheet. Go to reports, go to financial, go to balance sheet. Balance sheet at the end of the period will show that we still have $150,000 to collect, and the allowance for doubtful accounts is $12,500. Our net realizable value is $137,500. This is what we show on our balance sheet. Now,